Bala, if you have to release a newsletter to your unit holders and to your FSAs saying that फिर एक बार Modi Sarkar and how to make money, what should one do? How do you think the newsletter will start and how do you think the newsletter will end?
Of course, newsletter is, anyway, I just wrote a piece yesterday more for internal communication. I think the biggest plus point post this mandate for the electoral mandate yesterday is the continuity of policy, continuity of reforms, and continued focus on driving the growth and the rural economy, both coming from the farming income getting doubled, and the focus that they brought in affordable housing need to be pushed. And if you look at from multiple angles, and whatever the government has been doing for the last 2-3 years have been largely towards building a broader economic growth coming from not just only one parts of the country, it's coming from across parts of the country. That's one. And second, the effort that was taken by the government a few years back in terms of pushing the GST, which I've been of the opinion that the big focus that would come by the new government and the policies is around making a powerful reform that is such as GST, how to contribute, how to make them contribute to the larger pool of collection of taxes. That also will become one area of focus. The more the money comes in the form of tax collection, the more the benefit that will be given for the social benefit, and therefore it becomes a real nature of inclusive growth. So, so that's why I've been thinking, and we have been pushing that continuity, I think, is the key to the success. And therefore, one has to look at the India as an economy, as a market, as a $5 trillion economy in the next, say, 4-5 years, as we put out a report sometime in the month of April in our investment equity voyage, which we normally do every year.
So, Bala, debt versus equity. Do you think the hallmark of this regime really could be that RBI and other bureaucratic challenges which were there when NDA 1 started, those challenges have been ironed out from day one itself, and we could be looking at a strong realignment between all the government machinery, and interest rates will remain low, and RBI pleasantly would remain a loose monetary policy? I'm not putting words in your mouth, but I'm sure you're getting the hint of my question.
Yeah, I think clearly if you look at the last 6 months, Nikunj, especially post the ILFS crisis, and then subsequent to that, the pressure that we saw in the financial market, mainly through the NBFCs, there are a lot of steps taken by the Reserve Bank of India in terms of pumping and liquidity. The long pending issues with respect to the currency volatility, apart from the inflation control, also have been working in the right direction. There is an announcement of Reserve Bank of India in pumping and liquidity through the dollar swap. Is also, I used to call it as a master stroke from the Central Bank of India, of providing an open window for foreign investors to put in money and then reduce the hedge cost. See, all of that I think will augur quite well from the bond market perspective, from the liquidity perspective, as well as for Reserve Bank of India action, policy action point of view, also would be more favorable. I think if the global slowdown happens and then oil prices stay low, and then as we have seen in the recent past, there is a bit of slowdown in the Indian economic growth. I think if you look at it from all angles, there could be a substantial support that could come from the Central Bank of India, Central Bank, which is the Reserve Bank of India, mainly on focusing on providing more liquidity, cutting rates, and alongside the Government of India may also push more money being available for the purpose of lending towards the SMEs and the medium sectors in the country, so that the prosperity can come over a period of next 3-4 years more in a structural manner, rather than the prosperity comes in little bit in bumps in the short term.
You know, Bala, just trying to identify for investors who now want to jump into the market, and especially the retail participants who believe in SIPs, who believe in the long-term story and who want to do it in a very disciplined, systematic way. Would you say that it still has to be a very balanced approach in your portfolio, both debt and equity, or would you be skewed towards either debt or equity in any which way?
Of course, any investment principle has to revolve around the right asset allocation mix between the fixed income and equity. Fixed income cannot be ignored, though it may not generate very high return as like an equity. And also given the fact that in India, most of the investors are hugely underpenetrated while it comes to the question of investing in equity. Therefore, the high level of focus has to be on equity in order to build a longer term portfolio. And also given the fact that we are looking at $5 trillion economy in the next 5 to 6 years, and there's again getting strong support coming from the stable government. Therefore, what I mentioned earlier, the outlook is pretty positive. Therefore, the equity as an asset class, first every investor has to build to an SIP as well as a lump sum. And there is always one question which comes the last few months. There has been some bit of slowdown in terms of equity flows. But I think one of the mistakes that investors should never do is to actually stop the flows in equity in the form of an SIP and then try to time the SIP investment itself. Despite the performance in the last 1 year may not be up to the expectations, and that should not actually make a change your decision of stopping the SIPs. I think one has to build portfolios by continuing to make the investment in SIP and in equity. Having done that, one should also keep the fixed income as one of the alternate to the fixed deposit as additional investment that one can make. And given the fact that tax advantage that we get on fixed income investing over a period of 3 years is pretty good, as well as the certainty of the return coming of somewhat acceptable level is also reasonably good.
Bala, when it comes to the overall liquidity situation, do you believe that we will see, after a period of dried flows and influx from the foreign institutional investors, that we will see domestic institutional investors as well continue to show confidence in the Indian markets long term?
I think clearly yes. I think if you look at this point of time, the bond market liquidity is getting better. That reflects on the overall money market rate that prevails today at reasonably closer to the repo rate. And Reserve Bank of India has been continuously taking steps on that. And second, I would also assume that foreign flows which got quite muted in the year 2018 and 2019 early period, and probably that could reverse. I think we'll probably see more and more FDI flows and FIIs flows coming into the country over a period of time, and that should actually provide more liquidity in the systems. And finally, the domestic savings, which of course has been actually a bit muted and been reflecting more in the form of savings deposit rate growth in the banking systems, may also shift towards the financial market, and therefore boosting actually the flows into the mutual funds. I think in a totality look at, I think overall the liquidity situation should get better with the improved sentiment towards investing in capital market assets, and that should, I think, boost actually the overall financial market activities in the days to come. We will not be able to expect too much things come in the short term over next 3 to 4 months time frame. I think clear directions will emerge, I think, post the budget presentation in the month of June or July, and therefore I think we will probably see larger flows coming into the capital market, especially in the mutual funds.
You know, when we've been speaking as well with a lot of market men, the consensus is, Bala, that the earnings momentum is still unlikely to pick up. There is an inherent slowdown, and that is only going to continue irrespective of who really comes into power and what happens with elections, flows, etc. Are you worried that we will continue to see some sort of a prolonged slowdown when it comes to earnings? Are you seeing any sort of a silver lining as to what may lead to a pickup?
I think there is a concern that last 4 months of slowdown in automobile sales, especially for the OEMs, both two-wheelers and commercial vehicles and passenger car sales, a bit worrying, and that again largely can be attributed to the slowdown of lending activities by non-banking financial service sectors, who have been the primary driver of growth for last 10 years. Therefore, that in my view, I think has to get addressed very soon. And second is people start looking at how the monsoon is going to play out in terms of boosting the rural economy. Therefore, the rural income will also start playing a role in terms of boosting the overall economic growth. And one of the things which I think came in the budget, in the present interim budget, that giving a special attention to the SMEs and the mid-sized companies lending, and the government of India create some kind of subvention for making the interest rates low, and also supported by a cut in interest rates by Reserve Bank of India. Overall, I think should help in boosting the profitability for some of the mid-sized companies. And also, given the fact that the last 1 year the markets run up quite a lot, the small and mid-cap companies, which predominantly runs in about thousands kind of numbers in the market other than top 100 companies. Today they are trading at a discount to the large cap valuations by almost about 42%, and that essentially is a 19% discount to the large cap valuations, which essentially means as the earnings starts improving, we'll probably see the broader market participation and pick up, and that should I think help in terms of boosting the overall the stock price returns as supported by the earnings growth coming back. Though there is no visibility of the earnings growth to come back immediately, and there are few indicators that are coming in the form of industrial activities gradually picking up, and private sector capex is now beginning to just show some sign of recovery. I think if you look at an overall basis, we might see improvement in the earnings in this financial year.
Waiting for that day, but nonetheless, great decisive mandate, and yeah, the markets are liking it. Bala, great to speak with you as always.